let's talk about what the GMR Group has been up to, what their growth plans are post the recent restructuring, and of course, what do they have to say about the deleveraging? What about the debt on their balance sheet? Let's take stock of all of that. We have Saurabh Chawla joining in from the GMR Group on the show. Saurabh, hi, good morning. After the last few years of restructuring, the structure is quite leaner and more efficient now, as we understand. What's the focus area for the management, and how is it that you see the next 3 to 5 years shape up for the GMR Group?
Well, I think the major part of the restructuring is over. We had demerged the airport business from the non-airport businesses more than a year back. And what we see right now is the last leg of that process. So merging of the private airport platform, in which Group ADP is a 49%, merging that with the listco is the last leg of that process. So the path that we had embarked about 5 years back was primarily to delever our balance sheet and to make our businesses pure plays. Those were the offerings that we wanted to take to the capital markets. We have significantly delevered our balance sheet, and now, as I said, with the merger of this private airport platform into the listco, this will be the last leg of that exercise. On the GMR energy side and the road side of the business, which is the demerged businesses, work is still yet to be done, but that's a separate conversation we can have sometime in the future.
Okay, so let's take things then one by one, because you talked about deleveraging. Give us some more details. What's the current debt, post the fund flow in FY24, and what would be the sustainable debt level you think, say, by March 24?
So honestly, I'll tell you the numbers which were as on December 31st in the listco, the consolidated numbers in the listco, which is the GMR Airports Infrastructure Limited. The gross debt was about 299 billion rupees, and we had cash and cash equivalents of about 49 billion rupees. So my net debt on the books was about 250 billion rupees. That was the status of debt at the listco in a consolidated form. Having said that, 19% of 7% of this debt, which is about 19 billion rupees, was the corporate debt. So our strategy was that at the holdco, where you do not have stable cash flows, we wanted to pare down that debt itself. And this issuance of foreign currency convertible bonds will ensure that this debt is also settled once for all. So this 7% debt of 19 billion rupees, that will get fully settled at the corporate level. The second aspect is, which is important, is that with this reverse merger of the airport platform with the listco, the operating assets come closer to the shareholders. So usually you have at least 15 to 20% holdco discount that happens from the operating entity levels into the holdco. And here, because it will be merged, the airport platform will be merged with the listco. That discount will pare away over a period of time. The cash flow efficiency of the upstreaming of cash flows as and when the free cash starts to happen, that will drive value for the shareholders. It will drive dividend flows to the shareholders as we go forward. So this is a very important aspect that we need to keep in mind. At the airport operating levels, because these are operating assets, the debt over there is taken care by the operating cash flows that come in those assets, and they're quite fine as we speak forward, because most of the Capex now is completed and traffic is coming back with a bang. So that's all. That's the way forward.
Good morning, sir. You said that bulk of the Capex is now over. So are you going to slow down on the expansion now? What is the Capex and expansion plan from here on?
So we're always looking for opportunities, but I think it's a parallel exercise. Our main focus is to strengthen our balance sheet, and this corporate debt deleveraging is a major exercise in that direction. As we speak right now, the Capex plan for Hyderabad is almost over. The expansion to more than 30 million passengers has been completed. And as traffic continues to grow in that part of the country, you will see much better metrics emerging from Hyderabad. And very interestingly, you see Hyderabad has got revenue share of just 4%. And hence, we expect actually dividend flows to start happening in fiscal year by end of fiscal year 24 or fiscal year 25. That's our expectation as far as Hyderabad is concerned. Delhi also, we are in its last leg of its completion of our capex. The capacity for Delhi airport is being taken up from 55 odd million passengers to about 100 million passengers. This is the last large capex that is being undertaken at Delhi airport with 4 different runways and cross taxiway to improve the efficiency of aircraft movements. So once this is completed, which is expected by September, October of this current calendar year, we are on our way to scale up these businesses. Just to also highlight that today the traffic run rate is above the pre-COVID levels. So at the pre-COVID levels, we are doing more than 60 odd million passengers in Delhi airport itself. So if I'm talking about it's above the run rate of 2019, then we are expecting that this number should, we are upwards to about 70 odd million, and we are talking 100 million capacity already in place. So it's a good point to be in, where we expect free cash to emerge in a defined period of time. Major capexes are over with. Refinancings are happening today at lower than the interest cost that we have on the books. So I would say it's good steadings as we go forward.
Let's take it a bit more pointed. Government is pushing a lot of new airports. Will GMR bid for it? Anything in the pipeline?
So first of all, let me clarify over here. It's not restructuring. In India, the word restructuring has a bad connotation because you go to lenders and you tell them that I don't have money to pay you, so restructure debt. This is a path forward to make our corporate structure leaner and meaner and make it far more efficient. So a merger of a private entity, a platform entity in the listco is not restructuring as such. It is to make the whole corporate holding structure far more efficient. To answer your question, are we looking for new airports? Yes, we are looking for new airports. In India itself, we have today 2 large airports which are under operation. Mopa has opened up. It's doing more than 10,000 passengers per day. It's already exceeding our expectations of traffic. And right now, international traffic has not yet begun at Mopa. We are going to begin a development of a new airport in Bhogapuram, which is Visakhapatnam. That is going to start sometime during this calendar year itself. We are in the process of completing the project financing for that particular airport, and we have a small airport in Bidar. So there is enough on our table right now, but yet we will always be looking at the opportunities to see how we can get into more airports within the country. It is the fastest growing aviation market in the world. It's a large market. And as India's economic growth gathers steam, as per capita income goes above $2,500, there will be an increasingly movement and shift from rail travel to air travel. And we want to capture that opportunity for sure.
Now, Mr. Chawla, the Kotak report that's come out has compared GMR airports to the airports of Thailand, making a case that it's valued as a perpetual business. So what's your take on the business valuation going forward?
No, I think Kotak has spoken. It has given various benchmarks, and I really don't want to, comment on that. It's a third-party independent report as such. But the underlying theme is correct. If you look at EV EBITDA multiples, we are probably the cheapest airport available on a platform level in India. And India is a far bigger market than Thailand is. And again, like I pointed out to you, we are at that inflection point where most of our investments within India are completed, especially in the two large airports of Delhi and Hyderabad. So we are very, very uniquely positioned to give shareholder value as we go forward. So far, GMR Infra has been valued as a conglomerate. We have created a pure play, and now we have merged these two entities to create a first pure play listed entity where the operating assets are very close to the shareholders, and hence the expansion of the multiple is a given. So let's wait and see. I think that's our focus, and that's what I think some of the analysts on the streets are also recognizing, and I think the recent uptick in the stock price is also reflecting that.
So what is the timeline of the fund flow from Group ADP, and how exactly is the money going to be used?
So the money of the FCCB, 2,900 crores has already come in, and it came in before 31st of March. And about 100 crores of the 550 crore earnout, that has also come in. So the total inflow of cash from Group ADP of 3,000 crores has already come in. And in effect, actually, we are not only net debt zero, but at the corporate level, but there are surpluses which are there. So that action plan has already happened. As we go forward, I think, as I said to you earlier.
Right. So any further monetization plans at perhaps the asset level of the holdco company?
No. We are not looking for any monetization. We are only looking at improving our profitability and cash flows. At the airport level itself, at the asset level itself, we had already stated some time back that we could look at partnership at the asset level with some of the financial majors. And with respect to that, if you look at in Goa, we had signed an agreement with the Indian Sovereign Fund NIIF. So we are open to at the asset level. We are not looking at monetizing any shareholding either at the asset level, operating asset level, or at the holdco level. Not at this stage.
Right. Thank you so much then for taking the time out and speaking with us, Saurabh. Good to have you on the show.